All right, so guys, let's get to analyze the market together. Let's get to analyze the market together. This video today might be different because I'm kind of like analyzing it rushed because there are a lot of things that I still need to do today. So since the market is opened, let's just go. Let's start with the dollar index first. Let's just first remove all of the red flags and start with the dollar index. Start with the dollar index first. So let's go to start with the weekly time frame. What do we see the weekly time frame on the dollar index? So okay, cool. What do you notice here at the dollar index? What do I notice on the dollar index on the weekly time frame? So what I notice is quite simple, very simple. You start at the market. If I could use my brush, it's just the market had went up, it came and consolidated, right, and then it broke, retested it here, and then now we retested this here. Now from here it's supposed to be going down to at least this point, right? That's what I'm seeing currently on the market. That's what the market needs to do, right? Simple thing like that. So what I need to actually do is to realize that okay, the market didn't only respect that, it respected this, right, this area, which it went down and then it broke here. Could be our neckline, like it's some sort of like a double top, right? It's sort of like the double top. So now we retested it, we are retesting this neckline here. So the market's gonna give us some reactions, but what you will see that the market maybe will come here and then it will just drop to the bottom side. That's how I see it. And now because now the pattern is starting to go what, it's starting to be a downward pattern or a downward trend. That's what I'm seeing, right? Cool. So since I understand this market structure, what two things I need to do from the market? I need to realize, okay, where can I have my edge? I realize I can have an edge here. All right, this is where the level is so sensitive, which I already retested it here. So this simplifies things for me. When I get to a daily time frame, I realize, okay, what could make the market want to come back? The only thing that will make the market want to come back is this gap here, right? This is the gap that was not filled. I knew that trading any USD pairs would be very difficult with those weeks, right? With those weeks when the market was just like, looks like it's gonna be selling, it looks like it's gonna be buying, without actually filling this gap. So the market will be way smoother after it fills this gap. Then that's so we know, okay, now we are going down. It has no other options, right? It has to go down with us, right? That's the only way we're gonna be like, okay, now the market is actually, USD pairs are actually like in a good position to be traded. So I'm gonna just remove this because I know that okay, somewhere here this is a very strong area. So what I will realize, I'm gonna use another strategy from here, right, which I'm gonna just try and use it in a H4 time frame if the H4 time frame allows me to, which it definitely does, right? So in the H4 time frame, what I really see is quite simple. What I really see in the H4 time frame is that I see, okay, the market here at a high, right, which it came here and touched here and then formed some sort of like double top before it actually started going to the downside, right? So it kind of like delayed a little bit before it moved to the downside, right? Before it actually moved to the downside. So by doing this, I realized that okay, also we have this upward trend that we broke, that we still need to complete the 80% or 90, and they still need to complete the 90% of it, which is somewhere around here. This will be around the 90% of this movement, right? We still need to come back here. That's why I believe that the dollar index is still going to be selling long term, right? So since I understand that, I also understand, okay, let me just use the formalities and draw the top one here, right? These are just the formalities, right? I know that, but the overall is here. The market overall is coming here, right? But for me to be comfortable, let me just hold 80% of it, because from here it could decide let me first double check if I did make a correct decision by saying it's a 90% by using my fib. Right, so these are my fib levels, which is 100%. 100% is where at the area where the market will lose volatility, right? So two things could happen here. Is either by overall structure is showing me that the market is going to be selling long term, but what I'm saying is there are two things that are going to happen here. First thing is the market, first of all, we have to fill this gap before it goes down, right? It has to like kind of like fill this gap before it goes down, goes down, goes down, goes down. Once it touches here, two things will happen. The market could start consolidation back to the top, creating what? Creating a bearish flag before it goes down, and then bang, and then bang, right? Those are the two things. This is the first thing that the market would do. But I know from here we would have a reaction that will push the market a little bit towards the top, right? So we're not going to be entering those buyers or reversal, because the market here they could just do a silly move to the top, to the bottom side, right? It would just not be in the right conditions to be traded. So another thing that would happen, that the market from here could just go straight down, and then when come back again it fills, and then it goes. Once it taps here a little bit, then boom, we break it, we test this, and then we go to the bottom side, and then we just went straight to the bottom side. Just go straight to the bottom side, right? Those are the two scenarios that could happen. But possibly I'm gonna stick with the scenario with the highest probabilities, because the market is a game of what? Is a game of probabilities, right? That's how simple it is. This thing is just a game of probabilities, man. Don't overcomplicate it, right? So what I'm gonna do here, I'm gonna just make it a little bit different, so that I know that okay, this is the area I will lose volatility, right? I'm gonna just use a different color on it, which is this one that I like to use, so I know that okay, here we're gonna be losing what? We're gonna be losing some volatility. So most people say here this is a resistance. Yes, you're cool. This is a resistance, right, that the market is facing. But me, I believe that the real resistance is here. When the market touches here, man, that's when we're gonna be selling. By the look of things, right? Let's go to H1 time frame and actually validate what you are saying. The market hasn't filled this gap yet. It needs to fill it in the future. So what I believe the market will do is simple. Here we had like a double bottom that was very simple, straightforward. You could have traded this double bottom because of this high gap. Once you have a high double bottom and you have like a gap there, it's easy to trade it, because the market is going to fill it. That's how simple it is, right? It's just that most people use some certain trend lines. They don't understand the overall structure. They want to say like, okay, the market has a double bottom, now it broke, give us a neckline, retest, now you're continuing to the top side. But they don't realize that the market is actually coming here. The market from here is going to be actually coming here to fill this gap. Then after that, we're going to be tanking to the downside. That's how I'm seeing things, right? That's how I see it. So yeah, man, there's the overall direction movement for the dollar index. If you understand the overall direction movement of the dollar index, you should be already understanding what you should be looking forward to at gold and at silver, and at what? Any USD pairs, right? USD JPY, USD CAD, and all of those pairs, right? So this is a little bit of my USD JPY, which I want to analyze any USD pair right now. So USD CAD here, we have here USD NZD. I think I'm gonna analyze Euro JPY just for a change, right? I don't remember the last time. That was the last time I analyzed Euro JPY, right? I will understand by the look of things that okay, the market is at a bullish trend, right? The market is going bullish. That's the thing that's happening, right? The market is at a bullish trend. We do what in my trading? We follow the trend. We don't go against the trend. So when I realize that the market is bullish, it's on a bullish trend, it's too simple for me, because now I realize okay, I need to do this, I need to do that. Okay, the market is here. It's almost like it's gonna push to the top side, right? So here I'm just only focusing on buys, right? Anything that I analyze should be like really be focused on buys. Because when you can see when the market has been forming higher highs and higher lows, 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 and now higher high and then higher low to push to the top side, right? So, and we also broke our all-time high, which is this is a kind of like, yeah, here we broke our all-time high, which was here, right? And then we created another high, which was here, that we broke to. So now we're on top of it. So now we are going straight to the top side. We don't know where the market will turn, but now we are going to the top side. That's what I'm seeing. We're on a bullish trend. So what do? We just follow the trend. Just simplicity. Simple like that. You don't need to overcomplicate anything. Right? It's simple like that, not broken. Right? That's how simple it is by the look of things. Right? You might be saying, yeah, it's gonna come and fill this gap later in the future, but not now. It needs to touch here our resisting trend line that I drew previously on a weekly time frame. So since I understand the market a lot more, right? Understand the market a lot more than you, because that's a fact. And then here is the highest high. It's called experience, guys. You don't gain this overnight, right? So just know this is the highest high, right? After knowing that, yeah, I mean, you're gonna be buying now here. This is maybe the right time to buy. So I know, okay, from here, this is the low that the market has to respect, which, okay, it has to touch here before it actually go to the top side, which it did, right? Which it did. I know that the market is gonna lose volatility here, but the look of things, it's gonna lose volatility here. I'm gonna change its color, so, and then I'm gonna change its make. It's gonna be dotted lines, simple like that, right? Why here? Because the market here had a gap that needed to be filled, and it did what it filled. That it filled those gaps, right? Which is one of them is here, which the market filled. So I know, okay, it needs to go to the top side now. That's how it is, right? If I was using support and resistance, you would see that from here, right, this here is where is our support. The market is what is above a certain support level, right? The market is above a certain support level. So what you could do is really simple, very simple thing that you could do. You were just like, okay, since the market, I made it like too far, yeah, the market is here. Yeah, you could be like, okay, since the market broke above, that means now we could be what? We could be buying. So this is an overall direction, man. From here, we are just buying from there to there, to that top side, and then maybe our stop loss is gonna be somewhere there. Remember that this is not the real trade. This is not the entry that I would enter and then trade the market. Like, if you are a swing trader, yes, you can do this, but currently I'm showing you an overall direction that, okay, this is the direction we are going. So you could maybe in your strategy adjust a little bit of things and understand the trend of the market, how the market works. And you also have a bullish engulfing candle from a 4-hour time frame that allows us to do this, because the market will take days to reach there. That's what I know, right? And also, since we broke here, we have what? We have a very bullish flag, which is here, that indicates to us that, okay, we are really in this thing, we are really buying, which is this one, right? No, it's not the most beautiful one, but it is there, which is this one that the market has respected, right? Broke it. Now we had a bullish engulfing. Now what is else left for us to do is to just follow the market, man. The market is buying long term, right? You should just follow the market. The market is doing what? Is buying what? Is buying long term. Man, this trade manipulating me to enter it. Yeah, you can actually, yeah, I mean, you can enter from here. By the look of things, you can enter from here. And then make sure just a stop loss, take profit a little bit. Yeah, I mean, you can enter from here. The market is gonna go up with you. You can enter from here. More if you can use the line chart if you want to, like, remove all the wicks and everything, but I believe that you need them in 1 hour time frame. Yeah, man, beautiful thing, beautiful setup. So USD Euro JPY, it's a buy. Let's go to Euro OD. Let's go to Euro OD. I think this might be the last setup that I analyze with you guys. At Euro what? At Euro OD. Let's go first today. Daily time frame, some sort of like. Okay, interesting things happening at the daily time frame. So from here, I know that we're at this upward trend that the market broke, right? It broke it. Now we're on what? We're on a downward trend. So simple like that. We broke this trend. Now we're on a what? We're on a downward trend. And here the market is reacting to this. That's what the market is reacting to. It's reacting to this. That's why it looks like the market is going to the top side, which is definitely not going to be going to the top side for a long time. It's just that the market is reacting, right? And then here I'm gonna just select all the sensitive areas that I believe that the market will touch. All the sensitive, no, yeah, those are the sensitive areas that I believe that the market is going to touch. When I go to a short time frame and we look on top, why did the market sell here? It sold because it was respecting a volume level, which was this volume level here. I want to actually analyze. This is the third pair with you guys. I'm gonna analyze 3 pairs with you today. Alright, so this was it, and then the market did what it did. This because it was respecting it on a highest time frame, which means okay, from here to there, and then from here to there. Right, it was respecting it, which it completed its movement beautifully. The market was just selling with us, selling with us, selling with us, selling with us. Right. So from this area, I believe from here the market is going down. It might surprise us, but I believe from here the market is going down. Most people are like, I know that most people, and that's why I believe, you know why guys, what I did to dollar index, I said it will touch and then go a little bit upward before it sells. It's because of this is like, it gave us the highest volume, it gave us the current volume going to the top side. So there's no way that the market is just going to pass this easy. It has to like do something, it has to have face some sort of like a resistance a little bit before it starts selling. But from now, yeah, I believe when we hear you are selling, might be wrong, but I believe we are selling here. This is a game of probabilities, remember. But it will be a high probability. This is like a moderate trade. It's a medium probability trade. It's not a high probability trade. By understanding over the structure that's going to be selling. While a high probability trade is if it gave me the same structure here, somewhere around here, if it gave me the same structure, I'm going to try and copy it. What if it gave me this same structure here? That would be like the opportunity when you give me the same structure here, right? So we'll know because it's below here and it's going to the bottom side. But let's say let's make it a little bit smaller. Yeah, if it give me like certain structure like this around here, that's when it would be a very high probability trade because it's below our resistance or currently our support, right? So that will be a very high probability. Or when it's in the middle, because we now it's headed what, it's at the selling area. It has touched our resistance, now it's going to touch our support. Simple like that. right? So let's go to 15-minute time frame and actually see 30-minute time frame. What do we see at a 30-minute time frame? Okay, we're seeing this. It's just simple, nothing surprising here, nothing surprising that we saw. It's everything that we expected to see. So here you could see, okay, the market filled this gap. When you enter this trade, make sure that you're entering it using proper risk management. And then here, man, you're having positive reaction. Here was half past, here was 9. Yeah, I mean, I'll just say from here, at this point, you could enter the market from here. There's like a 15-minute time frame. I'm just gonna start with 30-minute because I think it's way more. The market is way more visible on the 30-minute time frame than the than the 15-minute time frame. So from this point, if you enter the market, you can just enter here, right? And then now a stop loss. Yeah, there, it's perfect. And you could be going there to there, there to there. Yeah, that's it. So guys, I hope you will enjoy this direction update. So that's it generally. That's it for today. So thank you very much.